Okay, so shall we start?
Yeah, thank you, Carol. I just want to introduce Carol Benson, dear friend, and she's a senior partner and founder of Glenbrook Partners on the West Coast, and really privileged to have her. She's an expert in this field, and I think her expertise will come out during the course of the session. So over to you, Carol.
Okay, thank you, Leon, and it's great to be here, actually to be back here. I haven't been back in this building since I graduated in 1978, and I'm still having creepy feelings that I'm actually have an econ exam this afternoon. It's kind of washing over me. But just as a way of framework, I want to borrow from Dr. Noem this morning and say that indeed we're in a different story right now with mobile payments. Up until now, a lot of the conversation has been about what are they, why are they good for the unbanked, how do they work, what are the technologies? And we've really moved on, and the story now is going to be how do we scale this in size, how do we develop its use, and how do we build the larger financial services on top of these payments platforms. So that's what I'm looking forward to the speakers in the panel talking about. We're going to start, let me introduce Sacha Polverini from the Bill and Melinda Gates Foundation. You may have heard of them. And I've had the privilege of working with Sacha for a few years, and he has a unique perspective, blending the commercial and regulatory sides of what's happening around the world. So, Sacha?
Thank you very much. Good morning, everybody, and I would like to thank you, the Columbia Business School, for inviting me today to share what we do at the Gates Foundation. So, Sacha Polverini, I'm the Senior Program Officer at the Financial Services for the Poor. Sorry if I don't turn too much on this side, it's just a bit unnatural. And I'm responsible for policy and regulation within our team, which means that's a big first disclaimer. I'm not an expert in payment system and payment technology. I just deal with regulation and legislation underpinning payment system and financial services. So I'd like to really structure the presentation on three major sections, but I will not take more than 10-15 minutes. So I really would like to give you a brief overview about what we do, who we are, the Gates Foundation. I mean, as Carol mentioned, you probably heard about us. You heard about someone called Bill Gates and Melinda Gates, maybe, and what we do. But I mean, I'll get a bit more color about the different programs and how financial services for the poor fits into that economy. To move then into our strategy and theory of change, and then talk about more specifically about the ITU Focus Group for Digital Financial Services, which is a new initiative we launched last year with some of you actively participating as Kate Miskey, Carol, Simone, deeply involved, but also others. So I'd like to start my presentation with this slide, just to remind a bit the main belief of Bill and Melinda, who led to the setting up and the development of this foundation, that all lives have an equal value. So the work of the foundation is really to allow everybody to live a healthy and productive life, particularly with a focus on developing countries. You might not have heard about financial services for the poor, which is our team. You might have heard more about the work that the foundation is doing to eradicate polio, or to fight malaria, or TBC, or HIV. But we have 28 programs altogether. We have family planning, maternal health, water sanitation, but also agriculture and financial services for the poor. And this is probably one of those initiatives that has a lower kind of publicity, but is a bit of the connecting tissue between all the other programs at the foundation. Because one thing is clearly being able to fight disease and have live a healthy life, but then you need to eat, you need to pay bills, you need to pay for education. So access to financial services is very critical. So it's critical because there's a great deal of, great literature, amount of evidence saying that if you have the opportunity to access the right financial tools at the right moment, you are much more in a position to lift yourself out of poverty. And now, being poor is not a static condition, as you can imagine. I mean, as there are studies from the World Bank and other organizations quoted on this slide, saying that 10-30% of the population get out of poverty per year, But another 10 to 40% goes back into poverty. So the net result is probably negative or slightly breaking even. And this is because during your life, you can face different types of shocks, disease, illness, or positive events like a wedding in developing countries can be very capital intensive. And so, it really requires a major financial efforts from the household and can push them into poverty, which is absurd. I mean, such a happy event that can be disruptive for your life. And so our objective is really to make sure that this household and the target population that we have is to people living with less than $2 per day. Have access to basic, affordable, and simple financial services. The last 2 weeks ago in Washington, D.C., the World Bank released the last Findex figures and statistics. This is a survey that we also contributed at the Gates Foundation to fund. And it gives a bit of the state of the situation in 25 of the focus countries that the World Bank is currently active in. And the results are encouraging, positive. I mean, in 2011, which was the last survey, there were 2.5 billion people unbanked without access to a proper bank account. And now in 2014, we're talking about 2 billion people. So 500 million people now have access to basic services, which is great news, which is very encouraging. Although the use of technology is probably not the main driver, the situation varies from country to country. We have Tanzania, for example, that moved from a rate of financial inclusion of 70% to 40% thanks to new technologies and mobile banking. So East Africa is a bit of a case on its own. And so most of the results are really due to traditional banking services. So why poor people have problems in accessing basic financial services? Well, it's very expensive to be poor, to be honest, because they don't have access to credit. They don't have access to loans. I mean, they don't have assets that can collateralize for any sort of minimal loan. And so what happens is that they basically transact in cash, or they really make recourse to informal economy for their financial needs. And they are very smart. I mean, you might have heard of the financial diaries that have been done in Kenya and in other African countries. I mean, in average, for example, in Kenya, a household or an individual manage up to 10 different financial sources of finance. 10, up to maybe 14 or 30 different sources of finance. And they like to keep them separate. One is for education, one is for food, one is for transportation, one for seeds, one for pesticides. So they are pretty astute because, I mean, their resources are scarce. But they are not able to access traditional financial services. And of course, if they have the deal in cash, as you know, cash is not free of charge. There are lots of costs associated to cash, given the security issues, transportation issues, storage issues. So, it's very uneconomic for the traditional banking sector to serve this segment of the population. Because if you think about the brick and mortar, these are very costly to establish. And if you think about that half of the population that we are targeting who lives in remote areas and rural areas, how many branches are you going to develop and open to serve all this population? And there are economic barriers. There's a lack of information. These people don't have a credit history. So if they need to have a loan, we need to think about alternative way to collect data and create a profile that can allow us to predict whether they will be a good customer or not, whether they repay on their obligation or not. So in 2006 is then when the financial services for the poor team was created. And for the first 5 years, we basically focused on promoting savings with investments in more than 60 countries. And clearly the inability to create any momentum, because any investment was basically a little seed that we couldn't really follow up and build on. And so in 2011, we went through a whole strategy refresh or a strategy review. And we really worked with researchers, with consultants. We really took the time, like 18 months, to think about what are we doing wrong? How can we make a better and higher impact? How can we create a sustainable system that can serve the poor in a profitable way? Because even if this is a philanthropy, is a charity, we are not blind. I mean, someone needs to make money out of the poor, because otherwise, once the grant that we are providing are expired, extinguished, there will not be any business for serving this population. And so we made a lot of studies, and we realized that, as I said, this segment of the population transacts in cash. And cash is really the enemy. They put it under the mattress, they buy cows, but then if you have a smaller need, what do you do with the cow? Do you sell a leg? Do you, kill the cow? And then, what do you do with the rest? So it's very uneconomical. And in 2011 is also when we start seeing the first results of M-Pesa in Kenya. This was mentioned before as the kind of success stories, although Tanzania is now catching up and probably becoming better success stories than M-Pesa. And other countries have been replicating to some extent with different level of success the same model. So the usual mobile devices initially to transfer money, receiving money, so for domestic or international remittances, has been a big success story. It's a big game changer in this world. And so why are we focusing on that? Because we think that the application of information and communication technology, the mobile devices, can really help us reaching the poor in rural and remote areas. Of the 2 billion people that are currently unbanked or don't have access to financial services, more than 1.7 billion have a mobile device or have access of a mobile device, which is great, which means that we can really tap on the existing infrastructure and the technology that is available today, which is getting very, very fast, more and more sophisticated, to offer financial services to the poor and reduce the cost of transaction, because cost is a big issue here. We're talking about small value transaction, very frequent, so high volume, but tiny, tiny percentages, of their income. We're talking about transferring a few cents. So if you think about the banking sector, the traditional banking sector, how then can you handle with heavy legislation and compliance costs and infrastructure costs and operational risk, how can you handle a 30 cents transfer from P2P? So we need a different model that offers services and products that really are tailor-made for this segment of the population. We're talking about people without ID in most countries, without proof of address. So there are challenges in acquiring these customers, but also ability to offer services beyond payments. For us, being included doesn't mean having the ability to transfer or receive money or paying bills. It's really the ability to access savings, loans, and insurance products. And increasingly, actually, there's a school now, school of thought, or there are an emerging new concept, which is financial health. I don't know if you heard about that, but it's actually something that I heard last week from the Center for Financial Service Innovation, where you can be actually middle class and rich, but your finance could be totally disrupted. And this is because there's a behavior element. And actually you can be poor, but manage your finance properly, and you can be financially healthy. And I think that probably that's the next concept, financial inclusion being not an objective in itself, but more as a mean to get to a better situation. Our theory of change, and these are the countries you can see listed where we're focusing on, 4 countries in Africa and 4 countries in Asia, Kenya, Tanzania, and Uganda, and then Pakistan, Bangladesh, Nigeria, and India. The theory of change means that there needs to be some level of connectivity in the country, because if you focus on digital financial services and mobile devices, you need to have a minimum coverage, a signal that lasts for a certain amount of time, which is reliable. And we basically divided these countries into 2 groups, one where we develop payment services at scale, and another one where we try to offer financial services at scale. And so East Africa being the most sophisticated region in the world now for this type of products and services, we are working with the industry to offer this product. Now, this slide is not mine. I borrowed from CGAP. So Kate, you will be happy that I took advantage of this slide. And the information comes from GSMA, and you will develop further in the presentation the state of the industry. But there are 255 deployments, mobile deployments, but only 21 reach scale with more than 1 million customers. And this is because there are a number of issues and challenges that are currently hampering the digital financial services ecosystem to develop. Talking about regulation, we're talking about customers, we're talking about agents, business model. That means that the regulation in many cases can be an enabler, in most cases is a bottleneck. That means that we are now facing an environment with multiple players, untraditional players, which create a certain uncertainty for the traditional regulators, which are the central banks. And the central bank stays as a lead regulator. I mean, we are not contesting that. But as soon as you see MNOs, as you see hybrid companies, deposit-taking companies that are not licensed as a bank, how do you treat them? Customers, there are cultural issues. I mean, if you are a woman in Pakistan, for example, it's very bad to be seen in the street texting. Who are you texting to? I mean, are you making a transaction? Who are you sending money to? And they don't have access to the mobile device, which is basically held by the head of the household. And how do you deal with the interface? I mean, there was an interesting presentation we had last week from Grameen Foundation saying that women confuse hash and pounds, or they don't process the decimal. So, I mean, the interface on the mobile device needs to be very, very simple. And Kate can, again, studying the consumer perception, can give more information about that. And the business model. I mean, we're talking about very small transactions, very low value, how to make it profitable. We try to address all these issues from an ecosystem perspective, and we really have grants and initiatives in all of the 4 areas, because we need to basically have multiple work streams and in parallel. And we are working with regulators, we're working with the industry, we're working with providers. You know, there are innovation and startups. We are increasingly focused on the biometrics identification system to facilitate the KYC, which is very, you know, cumbersome, being, you know, based on banking legislation. We are thinking about G2P, and again, from CGAP, kind of first assumption, G2P for us was like a low-hanging fruit. So if you think about the ability to digitize bulk payment, so all the subsidies that the government distribute currently in cash in India and Indonesia to millions of people with a lot of leakages and inefficiencies and cost, if you can digitize all those bulk payments, you can instantly have millions of mobile wallets or bank accounts that you can leverage for additional services. It's not a low-hanging fruit at all. It's been proved very, very difficult to do. It's complex, and it requires a lot of effort. Now, in the last minute that I have at my disposal, I wanted to talk about the International Telecommunication Union focus group on digital financial services. So the ITU is the UN agency in charge for information and communication technology. We are working very closely with them. And the reason why I wanted to talk about that, because I'm hoping to recruit some of you for this initiative on a pro bono basis. I was sure I like that. So the ITU is basically giving us a possibility to host a forum for discussion where all the stakeholders in the digital financial services value chain are representing. We're talking about telco regulators, financial regulators, aggregators, platform provider, telcos company, financial institution, everybody. So it's kind of unique. And we met in Washington after the IMF World Bank Spring meetings last week. We had almost more than 90 people represented, a lot of organizations from around the world, 33 countries. The objectives are multiple, and primarily this one. One is to promote the dialogue between financial services regulators and telco regulators. We need to get them involved because although, as I said, the central bank is the lead regulator for payment system and financial system, we need to take into account that all this is now channeled through telecommunication rails. And we need to also get the telecommunication regulators more aware of what financial inclusion is, the problem, and the opportunities that are offered by their industry. And so we are thinking about how can we address some of the issues like interoperability, consumer protection, or security of the network, of the quality of the service that is offered, so that regulators can fast-track policy reform in their own countries. And so really developing principles, guidelines, or share best practices that can accelerate progress in developing countries. So this is an initiative that is ongoing, and I would be happy to have some of you involved, get your experience, your brains, your expertise, so that we can advance the dialogue even more. Thank you very much.
Okay, thank you. Thank you, Sacha. We're going to hold questions until the general panel. I'd next like to introduce Simone de Castri from GSMA. And for a young man, Simone has had an impressive range of activities and responsibilities, all related to financial inclusion. So, Simone?
Good morning. Well, thanks for saying young man. That's a compliment. it's very important that this presentation comes after Sacha. So usually my role is a little bit more challenging because we need to explain some of the background of what mobile money is, what we're trying to do for financial inclusion. But Sacha really covered this ground in a great way, presenting like the reason why we are here, where we're working together. The GSMA, the Gates Foundation, CGAP, and so many other organizations try to achieve financial inclusion using mobile technology. So what I'm going to present today is just a few data from the State of the Industry report, a publication that we do every year based on a supply-side survey that we realized with the help from all the telecommunication companies, banks, third parties, providers that are participating in the provision of mobile financial services. So the annual Global Adoption Survey is an exercise that we have done already for 3 years. This year we had 127 participants from 69 countries. And we cover with this survey mobile money, mobile insurance, credit and savings services that are offered through the mobile. What is important is that really this is the most complete supply-side survey for our industry. It really gives an idea every year to understand how many customers we're covering, what are the volumes of the transactions. I heard before there was a question about the data that we were presented, that Thierry presented. I think these data are quite consistent also with what other resources are presenting. For example, the Findex, which is a very complete demand-side survey, but also from country-based surveys such as a big survey that is going to be presented next week by one other Gates grantee. So first important distinction, which I think is clear from Sacha's presentation, but I want just to emphasize again what we're talking about when we say mobile money. We're talking about a transformational service that is trying to help people to have access to basic payments and to build a railroad for additional, more complex financial services that other partners can use and customers can access to. But the important thing is that mobile money doesn't require people to have, users to have a bank account at the beginning. So even if you're not a bank customer, you can open a mobile money wallet. Therefore, this becomes a very important service in countries where the banking system is not particularly developed, and there is still a huge part of the population that is financially excluded. What we need is basically two things. Sacha was very clear on this: a mobile phone and a network of agents that help us to build a bigger footprint for the financial sector so that people can do cash in and cash out operations and the registration, the KYC at the beginning. So that's what we cover with this survey. We don't talk about what is most commonly known as mobile banking, which is just when the mobile phone is used as an additional channel, like your laptop, to access to your existing bank account. That's not part of this work, which is also why in this map that you can see, most of the countries where we focus are those where there are mobile money services, which are on the south of the world. So Sacha already anticipated a few of these data, as Thierry did. So we have today we have 261, because these data are until the end of last year. But as of April 2014, we had 261 mobile money services around the world in 89 countries. Definitely the region that is leading, that is driving the development of this industry is Sub-Saharan Africa, but we see also that other regions are picking up, and we see more and more activity in Southeast Asia, in Latin America, and also in this East Asian Pacific area. So as of today, we cover with these services 61% of the developing markets. So it's quite an important number of countries where people can have access to these services through the mobile. And mobile network operators such as Orange are operationally driving 60% of these operations. Most of these markets have a very competitive environment. 56 markets out of 89 have 2 or more services, and 38 markets, 3 or more services. So there is competition that is increasing, and there is also a great opportunity, as Thierry said before, to develop interoperable solutions. So partnerships between mobile financial services providers, but also partnerships between these providers and the more traditional ones. As of today, there is interoperability in mobile money already in 4 markets: Pakistan, Tanzania, Sri Lanka, and Indonesia. More markets are trying to become interoperable, so we will see this year other launches of interoperability partnerships, particularly in sub-Saharan Africa. So what I would say at the beginning is very important is we're trying to have a broader footprint for the financial sector. People need to have access to these services. And what really mobile money providers are trying to do is to build, and it's the biggest challenge probably in the provision of mobile money services, is to create a network of agents that can do the customer due diligence of new consumers, and also provide them with services for cash in and cash out, so where people can put the money into the system, do the conversion from cash to electronic, and then convert back electronic value into cash. So as of today, we have almost around 2.2 million mobile money agents. And if we think that this industry is quite young, it's around 10 years that these services have been provided. As you can see, we have made progresses that other providers have not been able to do in decades. This is very important, really, where to reach out to the rural areas and all the customers that today are outside of the reach of normal financial services providers. There are statistics I don't have here, but some people have to walk for 10 kilometers for half a day to really enter a touch point of the traditional financial sector, and this is absolutely inconvenient. It's an automatic way to exclude them from the services that we have. How many customers we have reached thus far? So there are 299 million registered customers, people who have registered accounts, so mobile money wallets that have been opened. And there are 103 million active wallets. So this is on a 90 days basis. So there has been in these wallets a transaction that has been made in the past 3 months from the day of this revelation, which is December 2014. I think what is very important from this data is that compared to last year, we are increasing significantly the number of active accounts at a faster rate of the number of registered accounts. At the beginning, providers were trying really to get new people to sign up for these services, where now the focus of the industry is really to get them active, to use the services. And this is because the products are improving, because the strategies are changing, for example, the incentives for the agents, but also because there is a much broader variety of services that is offered through mobile wallets, which is particularly important. 21 services have more than 1 million active customers, and 5 services have more than 5 million active customers. So there are services that are reaching scale, which is important because the industry is developing expertise, and hopefully this will then benefit also the smaller providers. Clearly, as I said before, Sub-Saharan Africa is leading for different reasons, because of a lack of traditional infrastructure for the financial services, for the payments, but also because of more favorable regulations. We'll see this later. So the 10 top markets for mobile money, the markets where there has been highest mobile money penetration, all share one feature, which is a very similar regulatory approach. So regulation really matters because it's enabling the new business models to be used to offer these services. So there is a list of the countries that are really leading the development of these services. And what is important is that in all these countries, both banks, third parties, mobile network operators such as Orange or Millicom Tigo can have access to the market with different legal structures. Receiving a direct license from the central bank, creating a subsidiary, which is a financial service provider, an e-money issuer is regulated by the central bank, but these are all countries where these services are regulated, are supervised, and are offered with a competitive approach. So different issue that can be innovation that is touching these markets. And The other characteristic of these 10 markets is that they're all allowing for a market-driven approach to interoperability. They're not forcing providers to interoperate in ways that really creates costs and jeopardize their business. Orange is an example of one of the deployments that had to face a big challenge for interoperability in one of the markets where they were involved. The regulator asked them to be interoperable pretty much from day one, putting in place a system that was way too expensive to be able for the service to be profitable, sustainable. And as Sacha said, the interesting part of this industry, I think it's a big difference, for example, with the microfinance industry that was our hope for microfinance during the 90s, at the beginning of the millennium, is that this is a quite sustainable industry. There's a lot of private sector investment, much more than the philanthropic help. There are providers that are really making it possible to achieve these results. But we need the support of the regulatory frameworks to do this. So unfortunately, in these 89 countries where there is mobile money, there is only a small part of customers that can access these services through these innovative business models. So in these 89 countries, there are 2.7 billion adults that are living. As you can see from the first pie, 1.9 billion of these adults live in markets where, unfortunately, this innovation is constrained by regulatory decisions that are allowing pretty much only banks or third parties still with a conservative regulatory framework to offer these services. So really, the challenge that regulation is posing to this innovation it's great. And this is confirmed from also independent research. I'm quoting here a paper that was published in March from the University of Chicago, where they're saying that clearly heavy regulation and the fact that central banks are conservative and not allowing for different business models to be used is constraining the development of mobile money for the poor. How are people using these services? So as I said, mobile money started with a value proposition was like mostly for people to do peer-to-peer. The first commercial of M-Pesa was send money home. It was the people who had moved to work to the capital to send money back to their families in the rural areas. That was the first idea, the first driver for the usage of these services. But now we have wallets that are becoming much more complex and much richer. So people are using these services for peer-to-peer transfers, for bill payments, bulk disbursements, or to receive money from governments, for example, for conditional cash transfers, but also for payments of salaries. And also from the private sector who wants to disburse payments or do salary payments using mobile wallets. Merchant payments, international remittances is a very important services, which is growing, and I think over the next year we will see an explosion in this area. And airtime top-up, which is an important part, because the reason why these alternative business models are successful is because there are incentives for telecommunication companies to make the investments to make this happen. And this is in part related to their core business, which is airtime, which is what we all know, the mobile phone were used for before they became smart. There is a lot of participation with partners. As Thierry said, this is a very important side of the business. So there are 23% of these services are offered through partners and not directly by the mobile money providers. And just as an indication, when we talk about active customers, so the customers that we consider those 103 million active customers, they're conducting 1.6 transactions per month. So this is important because every year we can see that this number is increasing, so we see more and more usage of the services. As I say, cross-border remittances is a very important aspect of this business right now. There are huge challenges that the traditional players are facing in providing international remittances. And for the first year this year, we've seen mobile wallets being used also for cross-country transfers. The first examples are coming from West Africa and from East Africa, where there are some new corridors. And I think this really can be something that can provide can become very convenient for customers. Quickly, because I have only 2 minutes left. The platforms to access this challenge are different. So there is mostly these services are provided through the USSD channel, but also through the SDK and through apps. And one data that Carol I know likes a lot is that most of the providers are trying to open their APIs to partners, to customers, so to partners, to other partners to better provide services for their customers. This, I think, is very important because it's really allowing for innovation in this sector. Mobile insurance is a product that is growing. We have 100 mobile insurance services that are now active in 30 countries. We have more and more services that are trying to provide people access to savings account, whether using directly their wallets or connecting with banks. But I think it's important for people to really use their wallets to access a broad range of opportunities. And it's very interesting, the experience from Tigo, where for the first time, Tigo has been allowed in Tanzania a few months ago to distribute the interest that was accrued in the escrow accounts. We can maybe talk a little bit more about this, which I think is a very fundamental issue during the panel. And finally, the market for short-term loans is becoming quite important. So people through mobile wallets can finally access also emergency loans. We have some interesting experience in East Africa. In particular, I think Mshwari is a new product that maybe many of you know already. But what is more interesting for me is to see that one of the evidences from the provision of these services is that actually these new credit scoring models in Kenya are allowing for a lower numbers of non-performing loans with respect to the traditional banking service. So there is a very interesting type of incentives that we need to understand for where people are really paying back more often and more consistently when they're accessing credit services through the mobile. Thanks.
Okay, thank you, Simone. So we're now going to go ahead with our roundtable, and I'm going to invite the other participants on the roundtable to come up and join us. And I'll introduce Francois du Plessis from Econet Wireless in Zimbabwe. Hello. Do we have our other guests? Hi, Anne. Hi. This is Anne Camarillo, President and CEO of Boloro from Dubai. And Alvin, are you? Sure. Alvin Okari from Millicom International, Rwanda. And do we have Ludwig? Yeah. Here. Hi. Excellent. Ludwig Schulze from Mistral Mobile in New York. So as you can see, we are moving from the global and the theoretical to a little bit more to the on the ground and practical. And as I said, we're really interested here in the uptake, the move from the definition phase of what are we talking about to making it a reality. And the way we're going to do this is I'm going to ask some questions first directly of the other panelists, and then I'm going to open it to questions for everyone, including Sacha and Simone, from the floor. So let me start, Francois, with you, if I may, and ask you to comment on, we heard earlier this morning the perspective of the developed world mobile money, and just heard from Sacha and Simone about the developing world. What is your perspective from your experience in a number of countries in Africa? What is the key differences in digital finance between the developed and the developing world?
Good morning. I think to me the most important difference is that in the developed world, pretty much as we've heard this morning, mobile financial services or digital financial services are very much an add-on to existing banking services in most cases. Whereas in Africa, where I come from, representing the sort of developing world, we found when we launched the EcoCash product in Zimbabwe, the level of transformation that it created was astonishing. You know, when we first launched in 2011, 10% of the population had bank accounts. and banks had been around for 100 years. We now have we now have about 4.5 million customers on our mobile money system, and more than 50% of them are active. They transact at least once a month. We've got about 17,000 agents now, and most of them are active. One of the things that brings is that a lot of people are employed through that network in a country where unemployment is running at about 80%. So, you know, that's just a huge effect. About 48% of the GDP is currently running through EcoCash.
Wow.
So the transformation is remarkable. And I think to me that is the biggest difference between the developed and the developing world.
Let me ask one follow-up question to that. One thing that really fascinates me is we all sort of share this common vision that the end goal is what one of the speakers earlier referred to as wallet-to-wallet transactions, moving away from cash in, cash out. What I believe the Gates Foundation refers to as digital liquidity, when people are willing to leave their value in digital form. What happens to all the agents if that happens? How quickly could you see that happening in your countries?
That's a really good question. I guess the answer is that we would like to move towards a cashless society, ultimately. I think it's going to take a long time to get there. And the cash out, you know, we paid the agents for cash out fees. If that ever went away, the agent network would almost become superfluous. So I think we've got to find ways of keeping that network active, even when we get to this mythical cashless society that we all talk about.
Okay. Thank you. It's an interesting, further out question, but it's interesting to think about. I'm going to skip around on the panel here and turn next to Alvin. As Simone said, interoperability is a big challenge in many markets. And just as a little background perspective, I find it fascinating. If mobile money is the intersection of two industries, banking and telecommunications, those are two industries that have interoperability in their blood, right? Banking exchanges transactions between banks. You can make phone calls, you know. But it's produced a world of mobile money that is not interoperable to get started. But you have experience in Tanzania where they are actively tackling this problem. How is it going there?
Yeah, thanks a lot for that question, Carol. So in Tanzania, I think that was in 2013 the discussions for interoperability started. And of course, it wasn't easy because there's the element of the compensation fees, or what you call the interchange fees. Basically, the principle around interoperability is just to enable customers the ability to freely transact in mobile payments without the barrier of payment. Because currently, in most of the developing countries, when it comes to moving money from one person to the other in terms of P2P, the biggest barrier is the costs. Some of the players do voucher payments where a customer actually has to go and cash out a voucher. In Tanzania, the customer basically bears no extra cost as opposed to what you call an on-net transaction. So that has been quite a phenomenal contribution in terms of mobile payments. And the National Bank or the Central Bank of Tanzania has been extremely supportive towards that initiative. And as Simone has mentioned, regulation is a critical component of making some of these partnerships active. And as you saw early on this year, Vodacom was actually not part of the interoperability discussion, but they did agree to come on board with the support of the other players who have been very, very instrumental in that. So in terms of making, going to the next level for mobile payments and mobile financial services, the element of interoperability is actually very critical for the market.
Okay, okay, thank you. You know, interoperability isn't just an abstract concept. It's a very practical thing from the point of view of the consumer. It's, you know, we're used to our payment instruments being usable pretty much everywhere. You can pay anybody. And without interoperability, you don't have that. So logically, volumes should increase when the usability of the service increases. And are we starting to see that in Tanzania?
Yes, actually what you've seen, and that's exactly why Vodacom came to the table for the discussions, is because some of the smaller players like Zantel and I think Airtel as well, they have seen some traction in terms of transaction for mobile payments. And in terms of compensation, they're also seeing some revenues, because ideally how interoperability works is that money that has been deposited from one player's agent moves to a second person's mobile platform. So it means the cash out fees that the core player would have earned has basically been lost. But that's not the case. They're not losing revenue, they're actually making revenue. And what you're seeing is that customers are multi-SIM. So that's the first problem. But now you're completing that, you're solving that problem by making it interoperable. So if a customer has a Tigo line and wants to transfer to an Airtel line, it becomes very easy and it becomes cost effective. So it's actually, the fruits are actually starting being seen quite easily from late last year.
Okay, well, that's great. Ludwig, you had a comment?
Yeah, so apologies for, Leon will beat me later, but, this thing of interoperability I think is quite fascinating, because there's so much discussion about it when we have in the context of the developing world, that interoperability should really be the goal, and in many cases, funds are actually supported or only given on the basis of encouraging interoperability. But I think we need to look for a moment at the developed markets and recognize there's a huge dichotomy here. There is no way, for example, and I can be corrected by my friends, but Amex and MasterCard, for example, are not interoperable, right? Visa and Amex and MasterCard are not interoperable. They have absolutely, and continue to today, go after the marketplace as going for the total opportunity space. And I think in the emerging markets, we shouldn't be surprised when all the players will also try to do so. The cases where they won't is because someone can't win, right? Someone can't overcome the others, and then they will share. But I think we have to be a little bit aware that there's sort of an unfair expectation of interoperability, in my view.
Well, I can't resist responding to that by saying that in the developed world, what the card industry refers to as the acquiring side of the business has developed to create the effect of interoperability, even though, of course, the systems themselves don't. So I would argue that there is practically, but anyhow, let's not get into the argument. I want to move on to more, again, to the practical and turn to Anne. You're based in Dubai. Yeah. Have you been here? Did you just arrive, or did you?
I came to the States last week, so I'm past jet lag.
You're recovered. Excellent, yeah. Excellent. Well, we've been hearing a lot about Africa, but would love to hear your perspective on other areas of the world, and particularly we're focused here on this next story, moving on to the expansion and uptake of digital financial services. And what do you see driving the adoption?
Sure, and I think at this point, what I do is I go into a market, and I'll give you a quick brief on Boloro. Boloro is a payments network. It's a payment scheme, depending on where you're from. So it is the thing that creates interoperability to some extent, in that we will accept as issuers any mobile payment source, but we would also accept traditional organizations as well. So basically, any funding source that's legal we'll connect to as an issuer. Okay, and what we do is we create places for people to use it. And I think, to your point, what's next? Everything that we've talked about, and the speakers earlier mentioned this, at the beginning it was P2P, right? That's what's happening in the developing world, was P2P for mobile money. And now what we're looking to do is give people more places to use that wallet, to use those funds. So we create this branded network, and then we create more places for people to replace cash and make their lives maybe a little bit easier or a little bit nicer. So the types of places that I think are going to stimulate the next phase of adoption are enabling people to get on a bus and not have to use cash to buy the ticket. for parking. And I know that sounds silly, but in some of these places, parking is a big deal. So buses, taxis, parking, e-commerce, vending machines, microtransactions, but basically getting out there to merchants that are currently cash-based. And it's not simple to replace. These aren't the places where a typical acquirer can go in and sell these merchants. So in many cases, it's an agent, a top-up agent, who now can start accepting. So for me, those are the next things, and I call those killer apps. Those are the places where people use it every day, and it's going to help make their life just a little bit easier. So that's basically the story.
Let me, just as a follow-up question there, you know, we all talk about cash and think about cash a lot, and there have been many studies showing that cash is expensive for both consumers and merchants. But I think in many, many situations, the perception of merchants and consumers are that cash is free.
Oh, yeah.
So how do you reconcile the notion that we need a commercial model for payments with, you know, even in the United States, the Fed recently did a study and showed that 40% of consumer purchase transactions in the United States are done in cash. Okay, so that's a substantial amount. It's probably this room, it would not be representative of our behavior. But that's what the diary studies showed in a very developed country. When you look at the global statistics, it's really only the Scandinavian countries that I think are really getting past cash. So anyhow, long-winded background here. But how do we handle that? In your you know, bus example is a great example. Is anyone going to pay for that transaction? And if so, who and why?
Well, in this case, we set it up to where the merchant always pays. Yeah, it's not the consumer. This needs to be a cost-free experience or no extra surcharge for the consumer. But buses are just traditionally inefficient with cash. I mean, to give you an idea, the bus companies in Kuwait pay their drivers 4% of the net collections just so that they won't, to incentivize them to not pocket more. Okay?
Now, can I?
4% of the intake. So it's pretty easy to have a conversation with the bus company about what's the cost of cash. Now, some bus companies have shared, not when we were negotiating, right? But, and to that end, I don't create set interchange rates. I create it to a place where the merchants will like us. I want them to see that this is better for them than what they're doing today, right? So for example, in Jordan, the bus company told me that their cost of cash is 45%. Now, like I said, they didn't tell me that when we were negotiating, right? But then, so I go to Kuwait, and Kuwait, we do the pilot, it's all wonderful, they all like it, the customers love it. By the way, in Kuwait, there is no mobile wallet, so to speak, but we work with the telecoms to where they do direct acceptance off of their prepaid and postpaid.
Sure.
And what we found is that prepaid customers were topping up 4.5 times more a month than what they were before they started using buses, okay? Before this started. So the bus company, when we got to the point, they said, you know what, our cost of cash is not really that high. I said, well, but what about the 4% you're paying the driver? I said, well, we're probably still gonna have to pay them that anyway. I said, well, let's just work back a little bit. The point is whatever, they wanna do it. They want to do this. They have reasons, they have mandates. So it's just working out a number. And to some extent, it's charm, it's persistence, it's being all over it, and just finding a way forward. Okay. Yeah.
I can buy that, but what about the jitney operator? What about the small, and you know, I don't know, Alvin, I don't know if you've had experience with this, with the very small merchants.
Can I just jump in real quickly? I'll tell you, because we're doing this in both Pakistan and Bangladesh now. So it's something where the the tuk-tuk or the whatever it is in that market, they have to pay something for that vehicle. They have to pay someone for that vehicle. So you start with that payment process, and you make that structured. The other thing that we do is we provide the ticketing and the service support for their cash transactions as well, so that the owner of that device can now see all of the transactions that are happening there. So it's providing that parallel companion service, but it's a strategic move. It's not a simple thing. You have to do macro plan.
Just because I think this point is so important, I just want to ask if Francois or Alvin or Sacha or Simone have any comment on this question of who pays for small merchant transactions.
So when I was with M-Pesa, the merchant payment space was basically quite difficult. It took almost 3 years for it to come to fruition and to maturity. And one model that was adopted was actually making the customer pay for some type of transactions, because of course the merchants were not readily picking up the service. So the first thing was actually to educate the merchants the importance of securing your cash, having it not in a cash form but in electronic form, and making it very easy for them to use the same electronic value that they have for their day-to-day businesses. So for example, if they want to restock their shops, it becomes very easy for them to use the same value they have to pay the distributor who will come and offer products like, for example, beer or bread. So it becomes very easy. Now, for the customers, the small charge is actually about 0.5 to 1%. It's very small, as opposed to the fact of actually walking around with a wallet full of cash. So in Kenya, it has worked pretty well, and that's being extended towards Tanzania and other African countries. So it depends on what type of transaction and what type of merchant you're looking at. There's some small merchants, there's some large merchants, some retail merchants. So you have to segment them categorically.
Okay,
Yep.
thank you. Sasha?
Yeah, just one quick comment. One thing is who pays the fee. Then there's the other aspect, which is tax. When you start thinking about small merchants, having all these transactions traceable and trackable means that the tax authorities will be alerted about all the flux. And this is one of these incentives that is blocking merchants to use digital technology to receive this new payment system, because at some point they will have to pay tax. And on the transportation, there's the case of Beba Pay in Kenya, which was totally killed by the matatu industry. The matatu are those big, small buses that basically transport people all around the city for I don't know how much money. And there was a program to digitize payments so that you can go out and in and just pay. It was totally killed by the industry itself, just because they didn't want to get any trace of what was happening. And there were significant abuses in terms of consumer, because if you start from A to B, which is the two extreme, and you just jump into the matatu midway, you should pay a fraction of that. And actually, because the reconciliation of the transaction happens sometimes later, and you don't get the immediate information about how much you pay, there's a lot of uncertainty in that. So, I mean, in some countries it works, but in others it doesn't.
It's the revenge of the matatu.
Right. Thank you. Just moving on to another subject that was raised this morning on security in mobile payments transactions. Ludwig, this is something that your company works on.
Yep.
Do you want to add to the comments made this morning about how we manage security of payments in this new world?
Well, you embarrassed me, Carol, because I showed up a little late, so I'm not sure of all the comments on security. But yes, we concern ourselves in the emerging markets with ensuring, from a B2B perspective, that our customers can reach all of the potential consumers in the marketplace in terms of banking, payments, commerce, and then worldwide look at security for mobile in general, for sure. And so security is kind of inherent, especially in the emerging market context where so many of these transactions are closed loop and you don't have the benefit of some of the existing security logic that occurs already in the Visa, MasterCard, and American Express kind of networks. And so you really have to pay a lot of attention. And especially when you're moving to the mobile phone, which is in itself an environment that can be attacked through a variety of different ways, ensuring that device and that device environment doesn't get altered is a hugely critical piece of the puzzle. And as we see, the more that banking, payments, and commerce becomes popular, whether in the developed or in the emerging markets, it becomes a very significant target for people who are interested in basically taking the monies away.
Okay. Yes, absolutely. Simone?
Thanks. I think the broad issue that was posed before is fundamental security, privacy, in general compliance. We have a problem of the use of financial services for money laundering, financing terrorism. We need to make sure that the money of the people is safe in these services. And we know that many people are not using financial services, not only because there's no geographical reach, and not only because the products are not well designed, but also because they don't trust the financial sector providers. Banks or cooperatives have disappeared from one day to the other in Africa, and we see frauds happening in cards and here everywhere. So one thing that I'm enthusiastic about, I have to say, is that the mobile money industry is a new industry. Telecommunication providers are new to this sector. But in November, the 12 major telecommunication groups that are working on mobile financial services joined force and launched the Code of Conduct for Mobile Financial Services Providers, which really is an effort of all the industry to have a level playing field in terms of those are the business practices addressing data security, privacy, the safeguard of customer money, anti-money laundering. So there is really an effort from the industry to make sure that competition happens, to offer the best services, to have the best agents, but without making any discount in terms of the quality of the services for the customers, the stability and integrity of the financial sector. We're working on developing now, implementing this code of conduct, creating guidance for business practices together with Telecom, Millicom, and the other providers, and also doing a self-assessment for the OPCOs and then a certification regime for them. So I think really this is a new industry, but it's taking an important step, taking advantage of the lessons from the past in order to be not only inclusive, but also high quality and safe for customers.
Just a time check, Leon. We have until 11:30, is that it? Pardon? Yeah. I didn't hear you. I'm sorry. 5 more minutes. My goodness. It sounds, I just want to, I thought it said 11:30.
He said 11:30.
I just wanted to add to what Simone said and to say that the long experience in the payments industry has shown that fraud is rarely anticipated, that it's only when it starts to show up that providers make the investment in controlling it. And sadly, one of the ways they control it is by shutting it down or limiting its use. So if we want to really have this thing blossom, we need to address it now. So I'm totally supportive. Anyhow, I'm sorry I had the time wrong. Let me open it up to questions from the floor. Oh, the panel, I'm sorry. Well, we're going to wait. I had not understood. Then I get to ask my panel one more question, which is what I wanted to do. And I'll start again with Francois. If payments are just the platform for a larger set of digital financial services, what do you think the most important next plank on the platform is, or whatever the metaphor is? What's next after payments?
I think, as was mentioned earlier today, savings. A lot of people save money in their mattresses. And if you look at the history of Zimbabwe with hyperinflation, that was not a good idea at all. So we already have about 200,000 savings accounts, and that's growing. I see a lot more cooperation between banks and mobile money providers. And what I see especially is a lot more inter-country trade or inter-country interoperability. You know, it's one thing having all the operators in one country talking to each other. I think that we've got to start talking to each other across borders. Africa's got a huge diaspora community all over the world. If you look at South Africa, for example, there are people from African countries all over, and sending money home is really expensive. There are so many ways that we can add value to that by cutting the costs dramatically, and interoperability is one of those.
Okay, thank you. Anne, can I ask you the same question? What's the next beyond payments?
Beyond payments, I think, and as you say, even though P2P was one of the things that started mobile money, the fact of the matter is we're not there yet in many places. There's a lot of inefficiency in Africa, and I was surprised by that. We are working on applications with some of your colleagues on that right now between South Africa and rest of Africa. So payments is so big. I would say that from payments, there are two things. One, as you were talking about, is money transfer. I don't see savings yet, but what I have heard a lot of are businesses who are interested in doing truly micro lending. So there's a business opportunity off of these mobile wallets for the next transaction, to fund that next transaction that's coming up. So just a little bit of credit that's not your typical microfinance. That's a business that I see starting up all over right now.
Okay. By the way, we're seeing that in the developed world with Square Capital and PayPal lending and things like that as well. Okay, Alvin, what's your perspective?
Just to echo the same sentiments, for me, I believe the true spirit of financial inclusion is not for customers to have access to mobile payments, but for customers to be able to have instruments where they can bring the money that they actually have under the mattresses into formal financial instruments, like savings and credit products. And I've had the privilege of working with such similar products. One of them being Mshwari, which has over 10 million customers, and that, as Simone mentioned, the non-performing loan portfolio is less than 3% at the moment in Kenya. And Tanzania has also followed suit with Millicom, offering savings on the trust account. So that's also pretty critical. And why for me it's critical is because access to credit is equals to financial freedom. If customers of mobile payments are able to access microcredit, I have a story of Kenya where a hawker is able to get a small credit of about $10 or $20 in the morning, go to a factory and get small items to hawk on the streets. And by evening, they've been able to sell their commodities and they're able to return the value back to the mobile operator.
Wow.
So that's the kind of move that we want to make in Africa to get customers access to credit and access to savings. And that automatically makes a difference in the macro environment to the government in terms of fiscal policy, in terms of moving the money from where it cannot be accounted for to physical instruments.
There's an interesting sort of blend between the storage of money and savings accounts, right? And that it may be different in a developing world than it is for us. Simone, it sounded like insurance was one of the big ones, but what's your perspective?
I mean, as we see from the data that we have, providers are offering insurance services, credit savings, different type of payments, different type of transfers. I think what is important is really to have regulatory frameworks and operational frameworks that allow for more innovation to join. But I think what is important is to keep the focus on being transformational, doing something that is different and creating value for people. Apple Pay, PayPal, these are Square, these are amazing things, but they didn't change my life. What I'm interested in is in products that are going to change the life of people that are today financially excluded. So there is one story from the people who have been doing the FinTech survey that I love. It's about this woman who's is a woman who works. It's not something that happens everywhere, particularly in the developing world. It's a woman who makes money. It's a woman that goes back home every night and her husband takes the money and go and drink with her money. Thanks to a mobile wallet, it's a very simple thing, but the storage of value there, she can put the money in a safer place and that becomes her savings. She doesn't have to give count to the man in the family or how she's using the money. She can use this often. These people use their money for their children. This is how we're transforming life. And so I think the storage value, it's something that is very simple, but it's still absolutely underestimated, particularly from governments, particularly from regulators. And there is a lot of challenging because some regulators see this as deposits accounts. It's something different, and we need to work to create value on that.
I completely agree, yeah. Sacha.
Well, I just want to echo some of these comments. I mean, in Uganda, for example, we are seeing that with the increased use of mobile money, people tend to leave more money in the account. So somehow they are storing it, not depositing or saving it, they are just not using it. Instead of cashing out immediately, which would be the first reaction day one, second time maybe you cash out, and as soon as you get familiar with the product, you leave more money in it.
You said that's in Uganda?
In Uganda. From the foundation perspective, we are really, I agree also with the comment from a previous commentator. I mean, P2P is still not solved. And there are sub-segments of the population in the bottom of the pyramid that needs to have different products. So if you think about smallholder farmers, they have a total different economic cycle because of the seeds and pesticides they need to buy at the beginning of the season, and then they are super liquid when they sell the crop, and then they have educational fees to pay at the same time when they need to invest for their infrastructure. So thinking about how to smooth that cycle for education or for smallholder farmers or for women, these are also kind of like subset of product within the macro category of P2P product that needs to be addressed as well.
Okay, thank you. Ludwig, do you want to add in your perspective?
I think I completely agree that the net interest margin products are the future or the next step for the industry. There's no question. That's where it has to go. It also has to go there from a profitability perspective for the participants. But I think what we're also going to see as a result is a significant increase in the tension between the telcos and the banks, the traditional retail banks, because payments as a business for the retail banks is a piece, but a relatively small piece typically of their environment. But when the industry starts hitting on the core, right, the net interest margin savings and lending products, that becomes a really big problem from the retail banker's perspective. So I think there will be examples where some of the banks will say, fine, we're just going to take a treasury function and provide services to a telco to reach the consumers. But there will also be banks, and some of our customers in particular, who will say, no way, we will not give up the future of retail banking. And so that's, I think, a very interesting dynamic that will happen in the next few years.
I think you're asking us to feel sorry for bankers, right? No. Okay, no.
No,
I'm
they've
just-
sat too quietly too long, right?
Okay, thank you, I agree. Let's open it up for questions from the floor now, yes. And you're going to handle the microphone, okay.
Hi, I'm David Nussenbaum with EY. I want to go all the way back to Sacha's original good presentation, and you mentioned that, especially in the developing world, there are many, many people who don't even have forms of ID, yeah? So that really triggered a lot of questions for me. So how do we define ID? Are we talking about government-issued ID? Are we talking about other forms of ID? What are your thoughts about what does it mean to identify someone from whether you're a telco, whether you're a bank, and obviously what are the regulatory implications of that? And can these people, how do you see these people entering into the payments environment without ID?
Here, Sacha, let me, oh, you got it.
This one. That's a major issue. There are a number of, when I started working at a foundation, I was really surprised that so many countries don't have a national ID. And they might have 5 IDs or 10 IDs that can be very quickly counterfeited. I think there has been an interesting development at international level with the Financial Action Task Force, which is the standard setting bodies for anti-money laundering and CFT, terrorism finance, where they also allow documents that can be presented, not necessarily be a national ID, but a letter from the chief of the village or some sort of like other document that can be accepted. The acquisition of the customer is clearly key. And also is key not just the document you present, but also the paper amount of workload. If you need to have a copy of that that ID, even if you have an ID, printing the copy and sending to the headquarters when you are in rural areas, you don't have electricity, you don't have the printer. That's always cumbersome. There's been an interesting development in Mexico, where Mexico, for example, when they were holding the presidency of the Financial Action Task Force in 2011, they passed basically a legislation allowing anonymous bank account. So if you have a tier KYC system, which is where most of the countries are now going to, so you have a progressive sets of requirements depending on the functionality of your account, depending on the volume and the value that are transacted, you might have actually no necessity for an ID. So you have a self-certified identification kind of bank account. It was not followed by anybody. In West Africa, that legislation was also implemented. Nobody used it. I think all the others, operators, mobile money operators, decided to still ask. And the reason is that if you as a country or as a company are considered to have a lousy system or not a sophisticated system for money laundering and CFT, and I think we need to distinguish money laundering and CFT, because when we talk about small transactions, it's more a CFT problem than a money laundering problem. You don't launder money with 30 cents, but you can buy a bomb with 30 cents. Then it always goes to the next extreme. So you gold plate and you don't take advantage of the flexibility that even international standards can give you. So it's a big issue. I think that what we're seeing from a technological perspective is the emergence of all this biometric system that have been introduced in India, and Uganda was also looking for introducing that. Interestingly, you might ask if I need a fingerprint and you are in agriculture, you lose your fingerprints. In India, they take your foot fingerprints. So just to, solve the issues. And your eyes. So I think the technology can solve some of these issues in a very cost-efficient way as more as these technology is used.
Thank you. Other questions?
First of all, I'd like to thank everybody. This has really been a great panel. I couldn't help but notice on the list of the top 10 that Nigeria and South Africa were missing, and I just wondered what were some of the factors that hindered their development.
Is that a question for Sacha or for Simone?
I think it's I mean, probably we will reply in the same way. The activity is not, it's not there. I mean, the data show that Nigeria and South Africa are not between the most prominent markets for mobile financial services. Okay, now that's where we might diverge, but I believe in Nigeria a huge problem is the regulatory framework that actually there are, I think, 21 providers for mobile financial services that have been authorized by the central bank, but the regulation clearly discriminates against mobile network operators. So none of these providers is really putting in place the right investments to build the agent network, to build the right products to make Nigeria a prominent market for these services. There is a similar barriers, slightly different in South Africa, but still there are regulatory barriers that are quite significant. And this is the problem with many of the mega markets. Indonesia, Egypt, until a few months ago, India. So India still doesn't show in those statistics as one of the markets that is growing. We will see how it goes. Because in these mega markets, there is also a traditional relationship between the central bankers and the banking lobby, which I think is influencing the way the regulatory frameworks are shaped.
Okay, thank you.
Maybe I can add.
Sure.
So I kind of agree. Probably I agree. So the regulatory framework is a bit challenging just because mobile network operators are only allowed to provide the technological vehicle for this transaction. I think in Nigeria, from what I remember after being there, there's no awareness of mobile money services. There's a very little awareness because also the provider didn't invest in marketing. So there's no particular clear user case also in Nigeria. And of course, the regulatory framework is uncertain, which means that the operators are basically waiting to see what happens because the central bank has been changing regulation over the past 2 years. And so if they wait for the next wave of changes, maybe something better will come up. And so they just are holding an investment. And so everybody's watching everybody else. The good thing is that the CBN is withdrawing the licenses. So any dormant license now, because there are 21 licensees, but only 2 or 3 players really active and investing. So they are now withdrawing that.
All right, Anne?
I'm normally not that quiet. Actually, it's funny that those are the countries that you're asking because we started in the Middle East. We're launching into Africa now, and the first 2 markets that we're launching into are South Africa and Nigeria. We've signed local
opportunity.
Right, we've signed local partners there. And as we launch in these markets, local partners are people like Barclays Bank, the taxi associations, which are the minibuses, to launch 80,000 buses, and that's already starting to work. We have the first buses working. The grocery stores that go all the way from the major distributors to the spaza shops. Okay. So that's South Africa. Nigeria asked, please to be next, and we're working with one of the largest acquirers there so that we'll be brought into the traditional acquiring network. And as you say, it's not simple. You go to the central bank and the regulatory, and you need to find strong ways in. But you know, they're strong economies, and they haven't quite made it yet. So it's funny, right? Timing.
Well, I think, Leon, when you have your 6th or 7th annual conference, it'll be interesting to hear what the uptake answer is. We have time for one more question. Yes.
Good morning. My name is Juan Blanco from the Better Than Cash Alliance. I'm glad you brought the cost of cash up because I do agree it's expensive, unsecure, inefficient. And that's what we do at the Alliance. But I wanted to touch on what Sacha mentioned. I think it's very important about taxation. We had an event in Colombia 2 months ago, and all the stakeholders there mentioned constantly that because especially in emerging markets, there's a huge percentage of the economy that is informal. So obviously, a lot of these merchants are very worried about if they get into digital payments, they're going to be traceable to the government and be able to be taxed. So in your opinion, Alvin and Francois, in your different markets, how do you approach that challenge? How do you work with governments to overcome it? Because I think it is one of the big hurdles in digital financial services.
And we just have a minute each here, okay?
All right, I think the issue of taxation is non-negotiable in across most of the economies that you have in Africa. So all the players, in terms of merchant players, have a responsibility to file their taxes and to pay taxes to the central government. Now the focus is as a telco, as Millicom, our responsibility is to ensure that the merchants and the micro merchants make their obligations to the government in terms of making payments. But how you encourage them to make to adopt the service to ensure that you give them the benefits of taking up merchant payments in electronic form, so using mobile payments and using merchant payments. So selling the idea of reconciliation, selling the idea of security. For most of the merchants, like in most parts of Africa, security is a bigger problem than taxation. And in most parts of East Africa, what you've seen is that the government is very strong in terms of enforcing payment of taxes, or basically disclosure of taxes. So the key thing is for as a telco is to push for the benefits of electronic payments using mobile, and to sell that idea to the business person so that they can see the benefits, that they actually collect more. Some of them actually still lose money through pilferage. The staff normally don't account for all the value. But having it in an electronic form, it's easier for them to account for them. So for them, the benefit of being able to account for all their sales is bigger as opposed to the issue of evading tax.
Okay, thank you. Francois, did you want to add? We just have
No,
okay,
I
you're
pretty
fine.
much said
And
it, yeah.
I wanted to come back to Simone, who had one more comment. You said on the previous question.
Yeah, sorry, just not to be misunderstood. I think the problem here is not to have telecommunication companies against banks, against Visa and MasterCard, but to have frameworks from a legal and from an operational perspective that allow for partnerships to happen, that allow to have a bigger financial sector with people entering, having their services that are used safely and conveniently. And then a person who is entering now, having a mobile money account, in 1 year, this person probably will hopefully will reach the limit of usage of the account, but will become educated to use a financial services, will understand the importance of use formal financial services, and will graduate to have a bank account. So we really need to see mobile money and the role of telcos as an entry point to build an infrastructure that today is absent in most of the countries where we're operating, and then to create these partnerships all together with all the players that are represented here and in the market.
Okay, thank you. And thank you to my panel in general for all of the comments. Okay.